All right, welcome back this morning. We're going to have another very important discussion, one of my favorites. This one is on the subject of buying low and selling high. You like the ring of that little jingle? What we're talking about is every investor's dream. We're talking about being able to buy a stock at, say, $5 and sell it at $10 in the future. And more importantly, we're going to try to discover the art form on how to accomplish that task time and time and time again. Does that sound pretty good? Well, the first thing that we've got to figure out is, what does this mean? How can we go about buying low and selling high? So we'll begin to uncover this riddle as we move into our first slide. It says here that the key to making money in stocks lies in mastering the fine art of buying low and selling high. And you might circle two words in that sentence that says fine art. We are dealing with an art form. It's something you got to work at a little bit. But there are some underlying principles you have to understand that are going to help you create the masterpiece that all of you are looking to do for yourselves. It's not an exact science. It's not an exact science. Is anybody still looking for the system that you'll never have a losing trade again? Rots a ruck. But what we can do is we can do everything possible to try to make that a reality. And so that's what this talk is going to be geared on. How can I use VectorVest to accomplish this task, this goal of buying low and selling high? Let's go ahead. First thing we have to broach is this question. How does one know when a stock's price is low? Well, let me present you with a couple of dilemmas. Some people say that when a stock is hitting a new 26-week low, it's low. Go right out and buy it. Problem with that is it could go lower, right? Stock could go from $40 to $80. And guess what? It could still be low. It could still be low. And so what is the secret? How can I figure out when stock prices are low? Well, here we go. We're going to begin to uncover this riddle for you. Most investors have been taught that stock prices are low after they go down in price. How many people subscribe to investment newsletters? Oh, come on, I get thousands of them. Okay? So many, anymore I don't read a one of them. I just delete them all. But, you know, vast majority of those newsletters, they're teaching you exactly opposite of what you should do. They're teaching you to buy stocks that are going down in price because they're cheap. We're going to change that mindset for you. And hopefully we can accomplish that in this talk and certainly this seminar. We don't want you to go about that business of buying stocks that are falling in price. You're going to see a slide right here. There's hardly a worse thing than you can do. You know, most investors end up following that advice, buying stocks that are going down in price, and there's hardly a worse thing that you can do than do that. I've seen many a talking head on CNBC and other places telling you, hey, you know what, GE's fallen $6. What a great company. Good PE ratio, you know, innovative company. Now's the time to buy it. Only to watch even GE, the mighty GE, fall another $8, $9 before it stopped going down and then started going back up. And that's the key, and that's what's on the next slide. So how do we know when a stock's price is low? The answer is simple. The answer is simple. When it has stopped going down and started going back up. And so we're going to show you how you can use VectorVest to make this determination. How you can figure out when stock prices have stopped going down, started going back up, and the likelihood is that they keep going up. Okay? Let's go ahead. The secret is to buy stocks that are going up in price. Dr. DeLito spent yesterday, the very first talk, telling you our most important indicator is relative timing. We want you buying stocks that are rising in price. We would much rather you buy stocks that are already doing what you want them to do right when you place the trade. So a lot of times you're going to see us make the comment in the views that, hey, it's okay to buy stocks tomorrow provided the market continues to move higher at the open. Has anybody ever seen us say that? Watch the market, watch the futures, make sure that the wind is still at your back. If you have the opportunity to use real time and evaluate the market after the first half hour to hour, good. The more the better. At some point you got to pull the trigger. But I ensure in every way possible that when we place trades, we want to place them when the market is coming to us. We want to place it when the stock market is rising and the stocks that we're buying are rising as well. And you'll get a heavy dose of that. Let's go ahead. So how does one know when a stock is going up in price? There are several ways to make this assessment. We've been doing it for years, whether you know it or not. And generally speaking, there's two camps of investors that have been attempting to solve this riddle for years, decades. Let's go ahead. First, you have fundamental investors who hold stocks for the long term and buy when they see attractive situations regarding value and safety. Lucky for us, what did we learn about VectorVest yesterday? Do we have an indicator or a couple of indicators that are going to help us make these assessments? Sure we do. And so as we go to the next slide, we're going to begin to talk about value. We're going to start with that assessment. What you learned yesterday is that our valuation model is different than any other model that's out there. And what we do on a market level and even on the individual stocks is we take a look at how much money the company is making. So value is going to go up when earnings go up, inflation goes down, and interest rates go down. We're going to favor the companies most. Value is going to go up the most when companies are making lots of money. Anybody like buying stocks of companies that are making lots of money? Sure. You know, money goes where money grows. Remember Dr. DeLito saying that yesterday? Investors are attracted by that because they want to put their money in a company that's already making lots of money. They realize that earnings is the engine that drives stock prices higher. So earnings is a big part of our valuation model. Inflation going down, of course, that lowers the cost of business. It also makes it a situation where investors have some extra cash to put into the market. There's lots of reasons, of course, why inflation is important. And we want to see that lower. We want to see those inflation rates go down if we're talking value going up. As far as interest rates, for R&D and a lot of situations like that, sometimes companies have to borrow money to accomplish that. Of course, if interest rates are lower, they don't have to pay back near as much money over the long term for that extra research and development they have to do. And there's other reasons. But I hope we all agree that in this type of situation, earnings going up, inflation going down, and interest rates going down, we have a best of all worlds situation. Okay? So the better that situation becomes, the more value will rise. The worse that situation becomes, in other words, earnings going down, inflation and interest rates going up, the lower that valuation model would fall. Okay? So we have a wonderful way to analyze value for fundamental investors right here in VectorVest. If we go forward to the next slide, we also have a key indicator to evaluate safety. And that indicator that you learned yesterday is called relative safety, RS, right? And so this is really majority of what is contained in the relative safety formula. We look for outstanding financial performance. And what we're talking about here in layman's terms is we love companies that do nothing but grow their earnings quarter after quarter after quarter, year after year after year. They are going to get high safety ratings. We also look for consistent and predictable earnings growth. So those two really tie together with that statement that I just mentioned. The above average earnings growth, you know, we certainly want the earnings growth to outpace the sum of inflation and interest rates, do we not? You know, we want to make sure that that company is going to be okay for the long term. And the average earnings growth in the database right now is probably somewhere around 9% in that neighborhood. And so certainly we would be favoring companies with growth rates above that threshold. Steady increases in stock price. When we talk safety, do you want to buy into stocks that are jumping around all over the place? No, that's not what you're after. You want the nice steady climber, the nice smooth steady mover. And so that's what we mean by that statement. Low debt to equity ratio. We prefer they have no debt. No debt would be the best case scenario. I don't know many companies that have that situation, but there are some. And so the better that debt to equity ratio is, the higher the safety rating would climb. And high sales volume might be the one that needs the most explanation, although it won't take long. Why do you think we would look for high sales volume? Well, when we talk safety, I want everybody here to remember a fairly recent situation with a company called Merck. Everybody's heard of Merck, right? Anybody ever heard of a drug called Vioxx? Vioxx was a $1 billion problem. For most companies, what would that mean? Bankruptcy. Okay? Bankruptcy. Merck is such a big company with such high sales volume that they were able to withstand what they would call a little bump in the road. And so with our safety ratings, we're looking at that situation as well. We want to put you in the safest stocks that are out there. And those are the kind of stocks that will have the high safety ratings in VectorVest. Sounds like a pretty good indicator to me. Let's go ahead. Now, on the other side of the fence, for years, it was a battle. It was grab your shield and sword and let's go at it. You fundamental investor, I'm a technical trader. Let's talk for a bit and tell you why I'm right. You know, the beautiful thing about VectorVest is we do combine the both. But technical traders for years have prided themselves in being more of a short-term trader, and they like to time their purchases when they see evidence of rising prices. And so some of the evidence that they look for when we talk just sort of global evidence, let's go to the next slide, are some of the situations that you see here. Price breakouts, stocks that are trading in a narrow band, and that breakout to the top, breakout to the upside. What direction is that stock price likely to do? Maybe not the next day, but in the future. It's likely to keep going up. If a stock trades in a narrow band and it, boom, shoots out, breaks out to the downside, what direction is it likely to go? Down. All right? And we all agree on that. So technical traders have been right for years as well. Upward trending, moving averages. One of the first forms of technical analysis was moving averages. Still works today. They work very well in trending markets, not so well in trading markets, but still a very popular form of technical analysis. And Todd's going to talk more about those in the next presentation. New highs on increasing volume. Anybody here afraid to buy a stock on a new high? Boy, I tell you, there's hardly a better thing you could do. It seems crazy at first. You're buying stocks at the peak, right? It's just going to crash. Here's the thing. If you find stocks that week after week are hitting new highs, you could just quickly look at the chart, see what is it doing with price? It's rising. Which way is it likely to keep going? Up. I know, it seems crazy, but that's the truth. And so hopefully we can all agree on that. And finally, a rising market. Rising market is, technical traders have gotten that right for years as well. A lot of really solid technical traders do look at market analysis as well, and certainly that should be a big part of what we do, and it is. You learned yesterday that when we're talking VectorVest, rising market means the most if we're talking buying stocks. It's the single most important thing you got to know before you buy a share. Folks, I'm glad that somebody has finally gotten it right. What we like to do is we like to apply both the fundamental and the technical analysis at the same time. This is the only company that I know of that still combines both fundamental and technical analysis and does it right. Okay? There's a lot of great companies out there that are pure fundamental. There's a lot of great companies out there that are pure technical. but we combine both, and we think we've got a great advantage because we do. Let's go ahead. Now, as said, market direction is the single most important factor affecting a stock's price movement. You might have heard Brian say this yesterday, if I remember correctly, but I like to tell people, you can do just about everything else wrong, but if you get market direction right, odds are you're going to win. You can buy some of the worst stocks out there, and they'll go up if the market is rising, and some of those stocks go up more than the good ones. There's a novel concept. You can buy stocks long in a down market, and if you buy the best stocks, sometimes they'll go down quite a bit, because people get fearful. People have seen a lot of profit. They want to take those profits and move on. And so we have to really understand this concept. And what we're going to do, while you're here, whether you know it or not, we've already started. We're teaching you how to buy low and sell high. So everybody keeps wondering, why do you keep going back and showing September of last year and running it up to March? Because that's buying low and selling high. That's what it's all about. Right now, we're well into a mature rally. It's not going to be as easy as it was back in September. That's the facts. But hopefully we'll get a nice big run here that will continue on. The key is we need to try to stay on the right side of this market. Let's go ahead. So the market timing graph is going to be a key. Now what I want to do is go into VectorVest 7 at this point. So in VectorVest 7, of course, we got some market analysis right on the home page because it's that important. Brian did a great job of illustrating that yesterday and getting started. One, along with Greenlight Buyer. I'm going to take us to what I think is potentially the most important place in the software outside of the VectorVest views, and that's your market timing graph. So hopefully everybody will see how to navigate to it. We're going to click on Graphs at the top. When we get to this Graphs pane, over here in the top left corner, it says Stock. That's a button. If you click on it, you'll have a drop-down menu. From the menu, we will select Market Timing. Market Timing, that's how you get to this graph. I think everybody ought to take a look at this graph at minimum, once a week. If you don't do it, don't want to do it, watch our daily color guard reports, okay? I want to take everything off but price. So what we're going to do is from the control panel on the right, we're going to click on, actually come down to the bottom and uncheck everything except for price, okay? Across the bottom, we have a number of those quick buttons that Todd illustrated yesterday. I'm going to have Brian click on 5 years. This paints a beautiful picture of exactly what has occurred in the stock market over the last 5 years. Has anybody heard the expression, buy and hold is dead? May not be dead, okay? But does it look like a lot of fun? The stock market today, even with this rally, we came off this low down here from the March 6th low on a candle chart all the way up to where we are now in April of 2011. Even with this rally, we're just barely higher than we were 5 years ago. And so if you were an average stock picker, it is fair to say this is likely what your portfolio equity curve has looked like over the last 5 years, outside of dividends and income and other things that you may have accumulated along the way. All right, if you're better than average, you slightly outperformed, and if you're below average, you would slightly underperform. So our job, one of the reasons VectorVest is in business today is the way that we analyze the market. Our job is to get you in when stock prices are low and get you out when stock prices are high. So if we start at this peak up here at the top, boy, wouldn't it be nice Wouldn't it be nice if VectorVest could help you lock in profits there? Wouldn't that be great? How many people have been with us since November of 2007? Fantastic. Hopefully you saw what I'm about to show. What I want you to do here, let's left click and hold just left of that peak and drag it across just to this low. Hopefully we can get that fairly well synced, okay? Now, this is the picture with inside the bigger picture we just saw. Remember, this price pattern continues to fall and fall and fall and fall. What I want you to do is pick out a date of November the 2nd, 2007. So he's going to come up to the top, and he's selected Dateline. And notice that we're on November 2 of 2007. Here at the bottom, we're going to click the button that says Confirmed Calls. You're going to see we have a red arrow that occurred the day before. And that arrow is what? What did we learn that is yesterday? A confirmed down. Would that have saved you a little bit of money? A whole bunch. One of the slides in your books makes a comment on that, and it's right after the market direction slide. It says the VectorVest market timing graph clearly shows when the market is rising, falling, or transitioning, and gives explicit confirmed up and confirmed down signals. This is one of the confirmed downs. Now, I really like that call, but had you missed it, let's back swipe to undo the zoom. We just left click and drag back, and it undoes the zoom for us. How about that next one? Just click on that next red marker. Was that a good time to be out of the market all the way down to here? Woo! I love it. Who said it? It's a good time to be short. Not only is that a good time to be out of the market and have locked in your long positions, locked in profits, it's a wonderful opportunity for making money when stock prices fall. And we can do that a couple of ways, and we're going to show you a couple of ways you can do it. For years and years, I started with VectorVest back in 2001 as the market was still collapsing all the way down to October of 2002. And boy, I got to tell you, that was some of the glory days. Everybody probably thinks I'm crazy because the market was falling, right? You can make so much money so quickly when markets fall. And of course, you can be aggressive in that decision, or you can actually play it with some reason. We're going to show you how to do that. So what we want you to do is we want you to sell stocks up there at these highs, and then when you get down to these lows, let's come all the way down here to March of 2009. We want you to start buying stocks when the market is low. And I think you'll find, if you go back and take a look at those confirmed calls, what they're going to do is they're going to keep you on the right side of the market most of the time. And that's going to be far better than buying and praying. The next thing I want to say is, before any of these calls come into play, we're going to provide guidance in our newsletter that's going to precede them, indicating that it's probably a good time to go ahead and start closing long positions now and getting into short positions if you want to do so, and vice versa. Closing short positions and getting into long positions long before these calls even come into play. You know, one of the things that I think is a fair thing for me to promise to you, we should always get you in to every market bottom and out of every market top within 1 to 2 weeks. All you got to do is read the views. And I think Dr. Bart DeLito, when he comes up here this afternoon at the last talk, he's going to give you an earful about reading his views. Because that's the single biggest thing he discovers when he's talking to people, is that they're not reading it. Otherwise, they'd know some of the answers to the questions that they're asking. Okay? But it's extraordinarily important. I'm going to illustrate why. In your books, it says that the color guard, on the next slide, top of page 8, it says that the color guard tells you when it's okay to buy stocks or not okay. So outside of this market timing graph, we also have on the home page, let's go back to the home tab, we also have on the home page a color guard. That color guard is going to be the last several days of market action we have. In the current view, we can see the last 5 days. And what did we learn about the color guard yesterday? When is it okay to buy stocks? When you see a green in the price column. And you can always cheat if you forget. You can read the text up here, and it says, VectorVest advocates buying safe, undervalued stocks that are rising in price. As long as we have some greens down here, needle's going to be out into the green section, okay? And that's going to be a good buying opportunity, but we feel strongly that the green light in the price column is the most important green light that's in that arrangement. Now, in your books, the next slide says bottom fishing is the essence of buying low and selling high. We had the bottom fishing opportunity of a lifetime. We may never see another situation like that again in 2009. There's only been 3 really true opportunities of that kind of caliber that we've seen recently. October of 2002, but then you can go back to situations like 1987. Does anybody remember those days? I was a little pup, so I don't remember them too well. But that's when the stock market really collapsed. That was a colossal collapse, okay? There will be opportunities again, but I want to show you how great this product can do for you when these situations arise. So, when we start talking what to buy, top of page 9, and we start talking bottom fishing strategies, what we refer to as the mother of all bottom fishing strategies is the first one that you see, and that's called jailbreak. And so we are going to take some time to illustrate it. Now, to do this, I want to set us up right. So what I'm going to do is have you go to the graph. We'll go back to the graph tab, and let's just come down here and select 5 years again. Okay, we're there. Perfect. I want to identify the low. To do that, let's put our cursor there. That low is on what date do you see right there? 3/6/2009. Everybody see it? Just remember, what happened after that date to the stock market? Oh man, it exploded. It actually exploded on the 10th, to tell you the truth. It actually exploded on the 10th. I'm going to show you how I know. I remember vividly why I know personally, but anyway, let's go into the views. We're going to go to the VectorVest views, so we'll go to the tab at the top titled Views. We'll go back to March the 6th, which was the bottom. It turned out to be the bottom. We had no idea at the time. Anybody able to predict the future? We can't either. We don't predict what's going to happen, okay? But we can use our indicators to get a sense of what is likely to happen. So if we go down here, we will change our date back to 2009 and then to March. And we'll go to the 6th. We'll click on OK at the bottom. This happened to be a Friday. On a Friday, we have a more comprehensive newsletter, and I don't want to talk too much about it because Dr. Bart will do that later on. But I do want to slide down to our essay. This is one of the better essays that I've seen in my tenure at VectorVest because it came in so timely, like we typically do. But this one is poignant because this was a tremendous buying opportunity. Here it says, what does it say? What's the title of the essay? Itching to rally. Does it say it's going to rally tomorrow? It says it's itching. We're getting the sense from our indicators that the market is ready to explode. Scroll down to the strategy section, or actually at the top, where it says all next to the date. I can click that drop-down selector and switch it to strategy. Slide up just a bit, and I want to catch our guidance here for those of you who are riding the wave. When we say for those of you who are riding the wave, we run a model portfolio that you can see the performance of. And what it says here, in that portfolio, we're playing the downside of the market with the 6 highest Contra ETFs. Contra ETFs is an instrument where you buy an ETF, and that ETF shorts the market for you. So what direction are we playing the market currently? Down. But what does it say here as we go on? From the buying Contra ETF strategy, which is located in the ETFs group, we will exit these positions and go long with one of the following strategies if an explosive rally occurs. Long strategies. Beliers bottom feeders. That's one that's in your book. Bottoms up. Jailbreak. Pirates long. Silver singles. Let's take a look at this little guy here, Jailbreak. I tell you the truth, I can run all of them. It doesn't matter. But before we do, I want you to see that our guidance is when that market takes off, these are the strategies that are performing the best right now. Okay? Let's go forward one day. So we'll go to March the 9th. And click on OK. And we'll go down to our strategy section. So we'll have to do a bit of scrolling. It says here that the takeover of Shearing Plow by Merck could not sustain the market's early rally today, as concerned investors drove stock prices lower, causing the NASDAQ to close at its lowest level since October of 2002. With 2 red lights and a down-down, the short-term and the long-term trend are both down, and an extremely oversold market. Prudent investors should not buy stocks. Aggressive investors should play the market with a bias to the downside, or should play it to the downside, but be alert for an explosive rebound. Not capitulation, not moderate upturn, explosive rebound. What are the strategies that are listed? Same ones we saw before, right? Slide down just a bit more to the color guard. What do you see on the color guard? Red, 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 red. We're starting to see a little bit more and more yellow through here, more consistent yellows. Okay? And now what I want you to do, Brian, is go forward one more day to March the 10th. Click on OK. On March the 10th, what do we see across the top of the color guard? Oh, something must have happened. Let's look at the price over here on the left. The price of the VectorVest composite, the arithmetic average index price, went from 1448 to 1517. Know why? That morning, the NASDAQ was up 5% in pre-market. The Dow was up about 3%, and the S&P was up 4% that morning. Anybody remember why? It was Citigroup. But if we scroll up here to the top, towards the top of the strategy section, it's going to say that news that Citigroup has been profitable in the first 2 months of 2009 sparked a major rally on Wall Street, driving stock prices sharply higher. Presuming that the rally continues tomorrow, there's that bit about let's make sure the market is still coming to us. Let's make sure the market is still moving up. Prudent investors should go bargain hunting and bottom fishing, even prudent investors. Aggressive investors and traders should play the market to the upside. We're even telling prudent investors, folks, the bottom was March 6th. This was a buying opportunity of a lifetime, and we knew it. Okay? Let's run some of those strategies that we listed. But look here, in riding the wave, what does it say we went long with? Jailbreak. Jailbreak was already up something like 12% that morning before we even got into it. It was just, bang, exploding. Let's take a look at some of the performance of these strategies. Okay? We're going to go back to our famous Unisearch tool we talked a little bit about yesterday. You remember some of those names? Just to rehash, well, we've got a couple in our books, so let's just stick to 2 of those. We're going to run Jailbreak, and we're going to run Beliers bottom feeders. What I want you to do when you get home is you can run any bottom fishing strategy in this folder you want, and they're all going to make money. So let's go back to March the 9th. We were still saying look for that explosive rally. March the 10th, you woke up and the stock market was getting ready to explode. What you should have been doing your homework the night before and running some of these strategies we were telling you to run to be ready to go long the market. Click on OK at the bottom. And let's go find our bottom fishing strategies. To do that, we have a folder called Strategies Bottom Fishing. Let's go ahead and click it to open it up. In there, let's find Jailbreak. And we want the version that says no Contra ETFs right there. Perfect. This search looks for stock prices greater than $1, decent average volume, only optionable exchanges, it's Derby ready, and we're looking for high VST and low RT. Oh, buddy, is it going to be low? Watch this. Click on Run Search. This is the only time you buy low RT stocks, when you're at market bottoms. Okay? It's the best time, for sure. What we're looking at is a situation here. We have CNNX, Citigroup. Oh, look at that. We got Citigroup in there. A Financial Bull, Direxion, 3-time leverage fund, Pacer. Look at the prices. The prices are low, so if this search is not for you, we can show you how to find better ones. Let's scroll to the right. I want them to get a picture. When you bottom fish, what kind of stocks do you want to bottom fish for? You want to bottom fish for the stocks that got killed the most, that got beaten down in price the most. And so one way we can figure that out is by use of our relative timing indicator. What is the RT on these stocks? On a 0 to 2 scale, 0.01. Are you kidding me? Is that thing gotten killed or what? It can't get any worse. It can't go to 0, 0, 0. At least I've never seen it go that low. Quick test the top 10. We're going to go up to the top and quick test the top 10 stocks. To now, the stocks are up 681%. Now, had you held these stocks all the way to now, you are greedy, 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 greedy. Piggy, piggy, pig. Okay? There's no way in the world you're going to do that. I'm not going to do that. I make 100% in the stock, man. If I'm not gone already, I got a problem. All right? So, we're going to take this date back and add a little bit of realism. Is anybody here able to eat Maalox for just 2 weeks? Okay. Let's take our end date back to 2009, so you can click right on the year, go back to 2009, and then click the month of March. And we're going to go to the 23rd. This is just 2 weeks later. Click on OK at the bottom, and then Run Test. Bang, 109% in 2 weeks. $4 to 11, 1 to 2, 1 to 3, 4 to 11, 1 to 3, 1 to 2, 1 to 2, 73 to 148. Now, some of you are saying, all right, Steve, I get it. These things made a lot of money. Look at the price. All right, I can deal with that. Blyer's Bottom Feeders answers that problem a little bit. How about this? I'm going to preach to you now. Let's click on that X. Anybody afraid to buy blue chips? Click on blue chip bargains divided by RT. We'll run that search on the same date. We'll click the Run Search button. Now, have you heard of these stocks? Aflac, the little duck, right? Cleveland Cliff, Hudson City. Now, that one you may not have heard of. ANSYS, RIM. Everybody's heard of RIM. Little blackberries. Okay? Let's quick test these. And we'll quick test them for the same 2 weeks. And so what we'll do, take this end date again back to 2009. We'll go to March. And we'll go forward 2 weeks to the 23rd. And click on OK at the bottom. and run that test. Bang, 33% in 2 weeks with blue chips. That's 867% annualized. Go ahead and close this out. Let's go back to the market timing graph. So we'll click Graphs at the top. Just give me 1 year. Click the little quick button at the bottom, and bang. Anytime you're dealing with bottoms, these are the kind of searches that you want to run, these bottom fishing searches. And of course, some bottoms are inevitably going to be better than others. We had a couple of really good bottom fishing opportunities back here in September and even recently in the month of March. Okay? Those are the kind of searches that you want to run when you're identifying a market bottom. One of the best ways to identify a market bottom, did we tell you yesterday that when the BSR goes below 0.2, that you're searching for a bottom? That's your key. Your setup for these searches are what Dr. D told you yesterday. When that BSR gets below 0.2, that MTI gets below 0.6, you don't go buy them right away. Wait for some indication. If you want to wait for a green light, that's going to get you, you're going to be fine. If you want to wait for the primary wave to turn up, wait for something, at least the primary wave, to make sure that the market is doing what? It's already busting out of that bottom. So, what happens after a market bottom, though? What happens after this market bottom? The rally continues on, and so should I be buying the same stocks as the market continues to rally becomes the inevitable question, and we don't believe so. Although some of our searches that are bottom fishers continue to do well, our guidance is then to move you into what we would term high momentum strategies. So, on the next slide, the bottom of page 9, it says, once the rally has continued for 4 to 6 weeks, it's okay to begin using momentum searches, such as explosive EPS 2, high VST newcomers, best stocks under $20. Let's take a look at explosive EPS 2. This is one that Brian showed you yesterday. So we're going to identify several weeks off this bottom. One way to do that, if we change this to weekly at the top, let's go up here to the top where it says end of day. We'll go to a weekly graph, and let's just go ahead and do best fit. Let's find this bottom. It's going to be this little doji right there. Well, sort of a doji anyway. It is definitely a turnaround candle. Let's go 1, 2, 3, 4. Where does it take us up here? Go to that next one. There you go, 920 area. All right, so we're talking about once the rally has taken off, it's beginning to mature. Once you get 4 to 6 weeks into a rally, it's okay to start switching to these types of searches. Now, let's go back to our Unisearch tool. And I'm going to use the date of 9/23, which is actually a little later than what we just showed you there, and I'm going to show you why. If we click on the date first to change it while I'm thinking about it, let's go forward to September of 2010. So we'll have to change the year. And then we'll go to September, and we'll click on the 23rd. How many weeks is that after the confirm call? 2. How many weeks does it take at minimum to get a confirm call? 2. Are we following the rule? Okay. Let's click on OK at the bottom. And now let's find your little buddy, Brian, that you demonstrated with Green Light Buyer. Let's find explosive EPS stocks 2. So to find it, the folder that it's contained in is Delta Searches Stocks, which is up towards the top of the directory. So we'll click that. And then towards the bottom of the list is Explosive EPS Stocks 2. All right. The key is that EPS 13-week delta that we talked about a couple of times yesterday in my talk and in Brian's talk. Let's go ahead and run the search. run the quick test. So we'll come up here to the top, select our quick test the top 10 stocks button. And bang, there you go. That's all the way to now. When did this rally stop going up and start going down? March, right? So we'll click on the date box at the top. We'll take our end date back to March the 14th. We'll stop at the confirm down. Fact is, we could have got you out before that. We'll click the 14th and click on OK. And then we have to click Run Test at the top. So this is getting in much later than Brian or I showed you yesterday. These stocks went up 31% and the market went up 14%. Momentum search is going to get it done for you? Sure. What I want you to do when you get home or while you're watching this CD set at home is take a look at the other two searches. Same date. They perform famously. They do exactly what they're supposed to do. Some of the best indicators for high momentum are going to be comfort index, certainly. RT times CI, these kind of high momentum sorts are going to do wonders. Let's go ahead and close this little quick test out. Knowing when and what to buy is important, but knowing when and what to sell can be equally as important. And so in your books, it says stock selection for what to sell. Strategies which return overextended stocks work very well at market highs, such as Vern's Vultures, Nomo Mojo, Sector Peak Short. Anybody have a weak heart condition? Don't mess around with these. Okay? What I want to do is go back to the graph to put it in perspective. So we'll go to Graphs. And this time, we are going to identify April the 30th. So let's see where we are on our current graph. And we're going to have to go back. And so we're weekly, right? So let's change this to daily. We're going to go end of day, and let's go for 1 year. All right, I almost got it for you. So what I'm going to have Brian do is come right down here to this bar that has the 1 year time frame on it, and I'm going to have him grab this left little arrow and just drag it a little bit to the left so that we can see price rising up into the graph. So we had to go sufficiently enough for it to load that in, but you see a market hit a low, rose up, hit a top, and then starts to do what? Come back down. And boy, this was a market of trepidation from April on through into August, May on into August. But let me show you how we could have saved your bacon again. The confirmed call comes in on what date? The confirmed call comes in on 5/7. Was that pretty good? The thing is, does anybody remember what happened just before that? Well, the flash crash, the market started to get hit really hard, but yeah, the flash crash was looming there. Did anybody feel like the world was coming to an end that day? I know I did. I walked into a meeting and the market was doing all right. I walked out of the meeting and it was down 900 points. I said, "Are you kidding me?" I saw an expression on a coworker's face that I don't think I've ever seen before. But the cool thing is, if we go in and start to explore our views, and I could show you, listen, I wish I could sit up here for 4 hours and just show you market timing graph views. Our track record is unbelievable. What I want you to do when you go home is take a look at these graphs, identify the highs, identify the lows, and see what we were saying our guidance was at those times. That's all I want you to do, because you'll prove to yourself that we know what we're doing. So that marker was 5/7. Let's go into the views on April the 30th. April the 30th comes before May 7th, right? Last time I checked anyway. Let's change our date forward to 2010. So we'll click on the year, and slide forward 1 year, and we're going to go to April 30th. Now you see the confirm down on that grid on the 7th, right? So we'll click on OK. We're in advance of that. In the views, at the top, Brian, let's go ahead and just switch it to strategy, where it says all. We'll click the button, go to strategy, and let's scroll up to the top. It says here that it may turn out that last Friday's closing price of $26.29 for the VVC will be the rally high, as it appears that a consolidation is setting in. The price of the VectorVest composite fell 57 cents per share from last Friday, and the primary wave is down. What does that mean? Price is down week over week. Okay? The buy to sell ratio is at its lowest level since April 1st, and the MACD has crossed below the signal line. All we need to see is a red light in the price column of the color guard, and we are taking our longs off the table. But we wanted to see a little bit more evidence that the market is headed down. And in order to get the first red light in the price column of the color guard, what has to happen to price? Has to go down for 2 weeks, which is a preliminary signal of sustainable trend. See how it's all tying together? Is that beautiful? And so what I want to do next is go back to the search tool. We have a couple of searches in here. We're going to click on the Unisearch tab at the top. What's that first search that's listed there? I wish I had time to show you all, but I'm going to show you Vern's Vultures. This was created by a subscriber. I believe won a competition with it. And it's continued to do well year after year. So over here on the left, in our directory, we're going to scroll down till we find Strategies Short. And all we've seen so far is green up triangles indicating bullish searches. What we're going to see now is red down triangles when we click that box, indicating searches that make money when the market falls. If we click on Vern's Vultures, which will be towards the bottom of the list, it's going to put some very interesting criteria in here. First piece of criteria, stock prices greater than 10 bucks. Now, that's a good price point when you're talking short positions. You get a little bit more comfortable, you might drop it down. My broker will let me do things well below $5 even, but I don't like to do that. The reason that's in there, it's got more room to fall. It's a little safer from the standpoint of higher price and so forth. The average volume of at least 100,000 is the next line. And we are looking for the RV to be less than what? 0.75. So you're better off in an alternative investment in AAA corporate bonds. Okay? The interesting part of the search is not so much that. The interesting part is the sort. It's price divided by stop. That creates an oscillator if you think about it. And what you're doing with price divided by stop is you're going to be looking for prices that are well above their stop price. The stock that goes to the top of the list will have the greatest magnitude of difference between price and stop. What does that mean the stock prices are still doing as you short them? They are going up, and not only are they going up, they are going up fast. Market timing matters here, because if you don't get timing right, you're going to get slaughtered quick. But if some of you out there are aggressive traders, boy, you can make money very quickly in these types of searches at market peaks. So let's go ahead and run our search as of May the 4th. And the reason I'm going to run it as of May the 4th, that is when we saw the red light in the price column. Okay, so we'll change our date up here at the top. If you don't believe me, check me out when you get home. We'll go to May the 4th, 2010. Click on OK at the bottom. And we'll go ahead and run our search. And here we go. We got a lot of stocks that are holds and buys, and of course they are, because prices are rising. So what I want to do is I want to take a look at some of these graphs. Let's just come up here with our quick button at the top. We're going to graph the top 10. Price is doing what on the left-hand edge of the screen? It's not only rising. How could we describe that rise? Meteoric. It is shooting up in price. Identify for me then May the 4th. May the 4th. The price right there is $14.51, and we are shorting it where in relation to the peak? Very darn close to it. Price comes down, explodes back up, and then eventually works out in our favor. But what I want you to do, for the purposes of this, Brian, let's change the cursor. Change it to Dateline. So we're going to come up to the top, hit our little down arrow, change it to Dateline, and let's go back and find May the 4th. Now, I know we had a nice big retracement there, but generally speaking, was that a good situation for a short over the longer term? Yes. Very difficult one to manage, and honestly, may not have stuck with that one. Let's go to the next one. So we'll use our scroll bar on the right. We'll just click in it one time. It'll take us down to the next stock. And do me a favor, let's push this control panel over to the right. Now, I want to show you something here. This IDT, use some reason. What did we say is some of the best kind of stocks to buy yesterday? We want to favor what? Smooth rising price, smooth rising earnings. Let's drag this back just a bit. Enough to where we can see what price is doing coming in. Just do approximately 2 years. What is that? Smooth, steady, rising price. Are you going to short something that looks like that? That's exactly what you think is a great stock to buy long. So I wouldn't necessarily mess with something like that. Okay? Let's go down to the next stock. That one would have worked out. That's kind of closer to what we just saw. Let's go down to the next stock. Boom! Meteoric rise, big fall. Anybody ever heard of Dendrion? You want to talk about a stock that moves around. That's one of them right there. Biomedical. Let's go down to the next stock. The key is with these, oh man. The key is with these searches, yeah, that's another biomed. Intermune. Let's go down to the next one. Huge gap down, drug ethical. Let's go to the next one. Boom, caught that one beautifully. Go down to the next one. Bang, look where we caught that one. Go down to the next one. Woo! You know, we had a good opportunity there through July. And so that's exactly what I want to show you next. Let's go ahead and close the graphics. I wanted to illustrate, you're catching these oftentimes at or very close to those highs. So let's go ahead and do our quick test. We're going to use the button up in the top right. We're going to quick test the top 10. And we're only going to hold these until July the 30th. Now, when you click this box, I'm going to go a little faster for you. We're going to use the quick dates on our end date portion. And let's look for that confirmed up. That was July 30th, I believe. The confirmed up was July 30th. Perfect. Let's click right on that and click on OK at the bottom and run our test. Important thing to know about quick test. It's not a portfolio. It measures percent change. It's a delta. So if the percent change is positive, in other words, if stocks prices are rising, you're going to get green numbers and a positive percentage increase. If stock prices fall, you will get red numbers and a decrease. That's exactly what you want if you're short. In this portfolio, 9 out of the 10 went down in price from that early call to our confirmed up call. To tell you the truth, I'm sticking around a little bit too long here. One stock went against us pretty good, but if we sort by percent price change, we'll click that column header just above and sort it again. We have one stock that lost 78% of its value, 51, 47, 46, 37, 33, 20, 18. And this strategy finds those kinds of stocks time and time and time and time again. It won a competition. It's done it for years. Beautiful strategy. Let's close that because I got one last thing I got to show you. Some of you can't do this. You can't do that in a retirement account. But what you can do is Contra ETFs. Now, if we're talking retirement dollars, you may not want to mess with leverage. All right? And I'm going to show you a couple of ways you can find Contras here. What would have been one of the best times to participate in Contra funds in recent history? I say recent. Let's think in terms of when did the bear market develop? November of 2007. Remember that? So let's go to Views at the top. We'll click on that tab. Let's go in our date window. Let's take that back to November the 2nd of 2007. One of the things that I used to love, it was great, when we were at trade shows back around this time, all these people that go to the money shows on TV, wherever they are, they're always talking about buying stocks. We were the only outfit in the whole show, several shows, saying, hey, you know what you want to learn about right now? Contra ETFs. In fact, Dr. DeLito wrote his essay on this date. If we go to the overview section at the top, scroll down, the title of the essay is Contra ETFs. Want to know why he started talking about Contra ETFs right here? Scroll down to the bottom. I hope I'm not stealing his thunder later. I probably am. It says right here, a word to new subscribers. The confirmed down signal that we received yesterday could be the entree to a long bear market. We're not there yet because earnings are still rising according to our method of analysis, yet we no longer appear to have the support of an accommodative Fed, and that can make things very bad for the stock market. So don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. That's why you read the views, folks. That's why you read the views. I guarantee, and I'll tell you from personal experience, if you stop reading the views, you're going to miss what you need to know. I know. A lot of times we figure, hey, I got it all figured out. I'm smart enough to go on my own. Listen, we cannot outsmart the system. The system is smarter than us. I'm going to tell you because we're emotional. The system is not. And so we need to listen to what the system is telling us and observe earnings and inflation and interest rates and make very educated decisions, okay? I want to show you some performance of Contras. So if I go into Unisearch, so here we are in the Unisearch tool. And what we want to do is come over here to the left. If you don't know where the Contra searches are, you could sort A to Z. So we'll just click that button. And we want to find a search that's listed in your books that says worst performing Contra ETFs. This is the better one of the two because you're bottom fishing. You're bottom fishing for Contra funds. Okay? We're going to click on that. It says this strategy in the comments box, this strategy finds ETFs in the ETF short industry group. They're sorted so that stocks with the lowest combination of RT and CI come to the top of the list. This is a search that is intended to be used in the beginning of a confirmed down situation. Okay? When was that confirmed down? That confirmed down was November the 1st of 2007. But I'm going to say it's a little unfair because we didn't start talking about them until November the 2nd. So let's go back to November the 2nd, 2007 with our date. Not only did we show you how you could lock in your long position profits there, we're going to show you how to make money when the market goes down. We're going to run that strategy. Okay, here's the list of results. Now, if you're talking Contra funds, you don't have to buy 10 or 7 or even 5 if you don't want. They are shorting broad market selection of stocks for you. One thing you got to be fearful of is some of these are oil, as in DUG. Some of them are sector driven. And those really need to be timed on their own because they're commodities. Okay? What you can do is stick to broad markets. How about QID? Click that one. This SH. You're going to hit Control on your keyboard. We'll click on SH. And let's just quick test those two. We'll come up here to the top, hit that down arrow, and instead of quick testing the top 10, we're going to quick test selected. Really the one I want you to focus on is that QID. There's some other non-sector driven funds that are in here that I didn't select. I probably should. But go ahead and click on quick test selected. All right, all the way to now, they made you 50%. But would you have held it through this strong rally? I don't think so. So let's go back, and we'll go back to March the 17th of 08. It was April the 3rd of 08 that we got it confirmed up. We're going back to March the 17th, which is when the market started to turn back up after this hit that began in November. So we'll go back to March, go to the 17th, click on OK at the bottom, and run the test. Now we're short, so we lost money, right? Good for you. When you participate in Contra funds, you buy them long just like a stock. So I don't want you to get confused. This actually is good. They're shorting the market for you. You buy it low and sell it high as the stocks go down in price. We made 39% while the market lost 15%. All right, because it looks like I did some cherry picking there, Brian, and talked my way around something, go ahead and close that out. And let's quick test the top 10. All right, let's do this. Come down here, click on QID, hold down Shift, and click on SKF. That's going to highlight all of them. So that's how you tag stocks as a group. And then go ahead and click on Quick Test Selected. Last thing I want you to do, let's take that date back. And I had so much more I wanted to show you, but I'm going to have to go. Let's take that date back to March 17th, 2008. And run our test. 29%. How many of them made money? All of them. Now with commissions, Doug is questionable, and that's your oil. Okay, so be careful with the commodities because they can move on their own, and that's good knowledge for you. The other thing is some of these big gainers, those are leveraged funds. And I got to tell you something. I've tried every way under the sun to try to manage those guys, and they're very difficult. Well, the best thing I can tell you about trading triple leveraged funds is if you got a profit after a few days, you take it. Okay? What I would suggest, particularly if we're talking retirement dollars, is you want to stick to the one-to-one funds, the non-leveraged. How do you find them? Let's go ahead and close this out. And what a one-to-one fund means is if the stocks that are in that fund fall a point, you get a point, an equal distribution. Those three-time funds are fun when you're right, because every point the stocks fall, you gain 3. But if they go the wrong way, you lose 3. And so on a day-to-day basis, that's going to drive you nuts. But what we can do is click on Viewers at the top, and then we'll come over here and we'll go to ETFs. And we'll slide down. We're going to look for non-leveraged Contra ETFs. And we want the non-leveraged Contras. That's how you find them. Anything you want to do in there is going to be just fine. Okay? provided the timing is right. But what do you think about the market timing that you saw this morning? Listen, I could run you through the whole 14-year period and show you. We're going to get you in and out of every major turn. There's always going to be some little bumps and wiggles that nobody can time. We're going to get you in and out of every major turn within 1 to 2 weeks, and that I'll promise you. All you got to do is stay abreast of the views and not get frustrated and stick with the system. If you stick with the system, your portfolio will never, ever unravel. It never will. The battle is going to be you and trust and faith and belief that VectorVest is going to help. I got to run. So we'll talk to you in a bit.